Morning, everybody. Glad to have a diverse and distinguished panel here. We have about 45 minutes, so we have a few questions which the panelists from their respective expertise areas will share with us their views and plans on going forward. We also have reserved 10 minutes for Q&A, of which I'm sure there'll be many, given that this is the opening session. Just for 2 minutes, if I can just set the context. Digital payments has now become the biggest buzzword in the whole of the payment space across banking, non-financial institutions, and indeed all fintech players. However, with less than 3% of personal consumption expenditure electronified, and approximately 10%, Vasu, of billing in India electronified, there is still a large journey to traverse. And indeed, it requires participation from all sectors, whether it's banks, whether it's non-banks, whether it's the myriad startups that are mushrooming in this space, to solve for the problem of how do we make it reliable, scalable, and revolutionary rather than evolutionary to get to a double-digit framework. To begin with, if I can just pose 3 themes and quick 2 minutes each from each of the panelists. And I think the 3 themes which are top of mind for everybody are, 1, we know our country is 2 countries. There's India and there's Bharat. And digital payments indeed have different implications for both. For India, it's about newer and easier way of transacting and reducing cost of cash. Whereas for Bharat, and indeed this is what the government is focused on, it means access and enablement. If you could quickly share your thoughts on what this means to framing the digital payments dialogue in the Indian context. Sohini, maybe I'll start with you.
Yeah, thank you, Ram. And I guess that's like really succinctly put. So I'm sure all of us will be able to share our points of view on this. I think that you summed it up when you said, is it about access and enablement or ease and convenience at one end? Actually, I don't think it is bifurcated like this. That's what happens when what we have done so far. For example, why is electronified payments only 3% of the personal consumption expenditure? Because we've been very limited in our thinking when we wanted to expand or electronify payments in the cards network. In the classical debit card, credit card, and obviously we tried to do stuff with prepaid cards, but it really never got us anywhere beyond expanding it. We tried to do the same products different products for the same people. I think with digital, we have the opportunity to think slightly differently, and instead of many more players trying to solve the same problem, targeted at the same customer segment, and then just at being crowded out, I guess what is important is for people to be able to take a stab at saying, here is totally virgin territory, what can I do here? And what can I do? Not really a different thing, but maybe the same thing differently, but targeted at a different population. Some of the initiatives, for example, when we classify India into this India and Bharat, we end up coming up with initiatives like the NUUP. Now, I am hoping there aren't any regulators in the audience here. We have actively participated in NUUP, and I have a banker friend on the panel. But it hasn't really taken off. And that's because we have tried to say that, oh, the metro, urban, whatever, SEC, AB guys have smartphones, and the rest of the people don't have smartphones. And therefore, let's create something for non-smartphones. And we've forgotten the fact that, no, even the guy in the rural or whatever non-metro locations actually does have a smartphone. It's just that he does different things with the smartphone. So why can't I come up with a version of, say, my mobile banking, which is targeted at him? Rather than say, I will give you something called USSD, which you, in any case, like even a guy in a metro can't figure out how to work this out, leave alone how that guy is going to be able to figure it out. So I guess it's slightly different. And we are trained to think like that, because that's what we've typically done. Like, let's introduce sachets for the rural folks, that kind of thinking. So maybe I think we need to just come up with maybe similar products, but just tailored differently. Let it be easier for that guy. If Facebook isn't changing what it looks like for the guy in the rural India and somebody in metro, then maybe all the payment service providers need to think about how they can actually make the same thing available to a rural guy, rather than try to create two different versions, when that boundary actually is also merging. It's not really distinct.
So Vishwas, building on that, on the digitization theme, what do you think are the 2 or 3 factors that is impeding it? To Sohini's point, one is form factor, whether it's the same products or products tailored. But from an ecosystem enablement point of view, is there anything you'd like to add to that?
Right, I think Sohini has come to straight to the crux point. I think the real issue is that all of us mostly are trying to do different things, different wallets, aiming at the same audience. The expansion of the market is not happening. And it primarily, as he said, regulators and other things also, like say to move to a cashless society, RBI has allowed cash card, prepaid and other things. But along with it also, the security hawks there put in certain conditions on KYC and other things, which does not enable us to go all out, in a sense that eKYC is still not allowed, as he rightly said, because if I'm the end consumer in a rural market, and if I have a cash, and if I were to move to a cashless, say a prepaid card, and if I have to get that prepaid card, I have to do so much of KYC as much as opening a bank account, then my cash is better than that. Right? So we are fighting against cash. So the eKYC norms that have been put in by the central bank, again, this year just to expanding, tomorrow if I want to issue a prepaid card and go to 200 million, 300 million, I cannot. I can't have the physical access points to collect all those physical KYCs to do it. Similarly, many others, like today, if you go to government and try to talk to them, they will only listen to you if you talk about villages. There's a huge ABCDs in urban areas, the I-buys, cooks and drivers, that needs to be banked first. There's so many, even in the whole mandate from the government perspective is first security plays a paramount, which dissuade. That's why there's a huge parallel cash economy.
Deepak, if I can just shift focus on to just maybe a couple of words from you on the ecosystem, aside from the regulatory on what needs to be done, as well as your own thoughts on, I know you had a view on enablement versus, sources. So maybe you would care to share your thoughts on that?
Yeah, so I think most of the interesting points I heard here, so I don't want to repeat what we've. I think be it India or Bharat, finally what you need to create is a frictionless payment ecosystem. And as Sohini had rightly said, I think today most of the solutions have been designed around cards, or to probably put a card on file, or probably get a carded customer to use these kind of fancy stuff. I think the reality is where our urban consumer or India versus Bharat is spending. I think that's the root cause. So one is the root cause is the source. Where is the money coming from? And the money, if continues to come in form of cash, you can't build a digital payment system. So in the classic case, what we discussed before, if you look at even a wallet, it's not that consumers are going and funding the wallet. Today is the e-commerce companies that are ensuring that there are those sweet deals for somebody to fund the wallet, or they ensure that in terms of either refund or cashback or discounts, they bring money into the wallet. It's not that customer says, oh, wow, I'm going to fund a wallet. So similarly, if you look at Bharat, even after the success, what we have heard of PMJDY and people having a bank account, question is, if I say continue to pay my driver, even in Bombay, in cash, either I expect him to take this cash and go and deposit into a bank account. Unlikely, because he can go to the shop next door who accepts cash and remits money back home to his family. So I think the source itself has to be tapped, and unless you bring money into the bank account or a mobile money account, you just can't create a digital payment ecosystem. The second part is, having got the money, where is Bharat spending vis-a-vis India? I think if you look at India, the large consumption is in the service or product consumption sector, which are far more easier use cases to build around the digital payment system. But when you look at Bharat, I think the challenge is today, if a farmer has to go and buy fertilizers, or he has to go to a mandi and sell his produce and get the money back from the cooperative society or these various mandis we have. The fund is, unless that amount starts coming to him in form of a credit into his prepaid or a mobile money account, he's going to finally find it difficult to use that money. And as long as the acceptance network in Bharat, where he's typically going and spending, he's not spending on Flipkarts and Amazons. He wants, his necessity is far different than the necessity of India. And I think that's where Sohini was right, that unless we start understanding the psyche and the journey of that customer and build a solution that takes care of his payment ecosystem, which is completely different. It's not just device or it's not about the platform. It's about understanding his source of fund and his intent to spend and build a platform around that.
Thank you. Vasu, you've been a pioneer in this space, probably 5 years ahead of your time, and now it looks like you're just about catching up the way things are changing. Having said that, in most of the countries around Asia Pacific, or indeed in the more developed countries, regular billing is a large source of conversion to digitization. And I heard you sort of give a number of 10%, which is sort of arguably nowhere near where we should be. What do you think are the couple of things which that whole sort of supply chain and the consumer chain process can contribute to the digital journey agenda?
Okay. Before I address that specific, I just want to react to some of the points made.
Please, go ahead.
Specifically respect to digital payments. I've seen the space in India for the last 10 years plus. I think the first key point I wanted to make, which is not necessarily core to the theme of the debate here itself or the discussion, payments is something that touches every aspect of everybody's life, whether you're buying something, paying for school fees, paying a utility bill, paying the maid, the driver. What I've seen it do to the ecosystem from just a, let's say, a business environment to an ecosystem perspective is it creates the fundamental belief in everybody's mind that they understand payments and understand how payments work and they understand how the payments need to work. It is best exemplified when I hear people straight out of college saying they're going to build a network that will kind of bring down a Visa or a MasterCard network in a short period of time. They will bring about a product that will replace the way people bank and transact in India. It's fundamental. I mean, that's a very core, to me, that's been a core observation over the last few years, primarily because as long as innovation is focused on that kind of a disruption, I don't think we're going to get anywhere in India. The rest of the world, to come back to the point that you made, the rest of the world does not pretty much behave like that. The rest of the world builds on what is existing and says, how can I build a layer of innovation that, looking at what exists, can be leveraged better to reach out to that segment that's not able to utilize. So, for example, just to draw a contrast, in the US, when people build innovative mobile payment products, they take into recognition that there is an existing card customer, there's a way they transact, and they're just giving them a better way to transact. India has infrastructure issues across the entire payment divide, whether it's the way cards get used, to the way banking accounts get used, or billers or merchants accept payments or not. To say in a manner that I think what Deepak also outlined, till you solve for the basic issues first, anything that you do on top is not going to yield results. And as long as it doesn't yield results, you're just going to keep doing more and more of the incorrect thing, believing it's going to change behavior. Billing at 10% is a very low penetration, agreed. And I think the entire ecosystem is focusing on how do you get consumers to pay more and more bills online. The good part and the bad part. The good part is if people manage to solve the problem and get the number up from 10 to 80 or 90%, it will do wonders for the country. The not so good part, a lot of people who are trying to get this number up from 10 to 90 are looking at how do I use the bill payment behavior and the understanding and the consumer information to somehow leverage it for my own business. So currently the market is in that mode of trying to distinguish between people who want digital payments to happen versus people who look at how do I use the digital payments to acquire a customer for a different business. Those will clash at some point in time. Those are different objectives. And we need to solve for that first.
Thanks, and we'll circle back to you on the interoperability theme, because I think it's an interesting motive there. So, Sohini, back to you now. In terms of, so two questions, or related questions. And I think Deepak briefly alluded to this whole notion of wallets, right? And then I heard Vasu say that there are this existing mechanisms, so between the existing debit cards, for example, and what PMJDY has done, there are about 570 to 600 million debit cards, which in and by themselves are stores of value. And then the linked phenomenon to that is how banks like yourselves and Deepak's are looking at the whole notion of P2P payments. And I know that apart from hashtag banking, etc., P2B has been a foray of yours, with the latest being PingPay. How are you looking at this transfer of value and the whole P2P, and how do you see that business case building out for yourself, especially given what Deepak argued, which is that unless there's a fundamental use case and it's being artificially funded, it's not an intrinsic behavior change?
Yep. So that's, I think, about half a dozen questions. So let me pick up my favorite one first, which obviously is about PingPay. So if you look at the way we've built PingPay, is also about not to say that, oh, everybody spends time on Facebook, let's just go and make like Facebook payments happen or something. So when I'm on Facebook, I'm not really looking at payments, right? I want to post my vacation picture. So the way we looked at it slightly differently was to say that, I don't want a guy to think about payments when he's on Facebook, but when he's thinking payments, can we make it as much fun or as interesting or as simple as if he were just posting a vacation pic on Facebook? And therefore, the journey doesn't originate from Facebook, but it is about simplifying. And there, I would, pick on what Vasu just mentioned about take something that is existing. So it's not a new way of payments. It obviously works on IMPS, which exists. And I think it's one of those really, really fantastic products that this country has, which I guess we're just about getting to leverage. We haven't really understood the full power of what a system like IMPS can provide. So what we've done is built this on top of IMPS to say, take the pain of transferring money out from this entire process. Typically, what you would require is ask the beneficiary, give me your details, then go enter those details somewhere, then it goes, and it's like a multi-step process. So make that fun, make that social, take away that pain, and also keep it personal. So, if I don't want to tell you which bank I have my account in, if you were to send money to me, I just need you to send me $1,000 for the dinner that we shared. Like, let me post a pic and ask you for it. I will decide where that money goes. And importantly, it is not a store of value. So, if we understand what a wallet does, is basically you pull money from a bank account, which in any case is KYC, and during that process, it is still that same friction. Like what wallets aim to solve for is frictionless payments, but to fund the wallet, you go through 2FA. So you have that friction, then you store that money, and then you hope that you will somehow, somewhere create an ecosystem of acceptance where this money will be used, which currently may or may not exist. So multiple flaws. Here, all you're doing is, it is push and pull immediately. There's no store being created, which fundamentally, everyone is struggling to find a use case for. It's the classic case of, imagine if we had all issued these 500 million debit cards and there was no place to actually use them. It's kind of a corollary to that. So yes, I think the wallet, even though they are growing exponentially, I think there are fundamental flaws which people are not answering for. And also the very fact that it is a result of a regulatory arbitrage, which hopefully will go away at some time. So the acceptance, building of the acceptance network and a universal acceptance, not like I will, set up my wallet and my wallet will be accepted at these 5 places, and then Vishwas's wallet will be accepted at the next 5 places. What do you as a consumer do? Like have 10 wallets? It's not going to be useful for anyone.
Thanks. So just leading on from that, Vishwas, I mean, this whole notion of now e-commerce sort of morphing into m-commerce. And I think Deepak made the point about smartphone and penetration in urban, and Sohini was talking about how smartphones are there in rural areas as well. And this shift to mobility, because there are arguably more Indians who will be there on their mobile phones than there will be on desktop or laptops or phablets. Do you think enough is being done, aside from saying my site is now available only on mobile and you can no longer accept it on website because every time you register on an app, somehow it's one more customer and increases my valuation by one more buck? Or is there something more fundamental we need to do? One is the friction aspect which Sohini alluded to, but just aside from that, you're working with multiple merchants and have been over a number of years. What sort of insights can you share with all of us?
I think transactions are moving to mobile. Anybody in this hall will know that the future lies in mobility and vernacular to grow the e-commerce pie in this country. So smartphone, yes, today there are like 180 million smartphones in the country. This month it should gross 200 million plus. So we're adding almost 6 million new smartphone users every month. Out of that, 35 million are actually internet shoppers who have done transactions. So smartphone, yes, mobility, easy way of access. It's leapfrogged the entire the PC revolution, what we saw in the early 2000s. So yes, so every merchant is, but I'm not sure only mobile is the only way to go, because I can understand you're doing a recharge or booking a hotel room or something and doing it through your own exclusive app and not having a website. That is good. But trying to sell apparels and doing only through an app where you cannot see if she's wearing a green sari, I don't think so she would be happy with the screen size to just see whether, take her informed decision whether to go in for it. So yes, transactions are moving to mobile. Smartphones are helping it with the lower cost, bandwidth also access becoming cheaper. But still, frictions, a lot of frictions at every step that is there. Data still is not in a happy situation, be it 3G or 4G. We don't get the kind of 3G what we get internationally. Then it comes at the acceptance levels on the merchants, most of them still moving to responsive design, building apps and other things. So that evolution is still going on. The pure internet companies have moved on, but the real brick and mortars are still to evolve. Payments, another big issues, many challenges in that. But having said that, India has the largest number of payment options in the world. So the challenges become even more. So if we just master Visa and build everything over it, so we can get you guys folks to just resolve some problems and get it going. But now we have 54, 55 banks allowing transactions through their core banking systems. Some have responsive design, majority don't in the net banking interfaces. So smartphone, that is a challenge of PAN and other things. Plus, there is the God, Reserve Bank of India. So God always means good. It is the intermediaries, like the banks in between, sorry, Rohini and Deepak, but they misinterpret, like even say in an IVR transactions were happening. Easiest way to do, it's multilingual. You press 2 for Hindi and then do the transaction. But there also, the way RBI said that you should have a second factor OTP coming in, but the way the OTP is delivered by various banks is such a laughing among us, because one is giving, you have to pre-call a particular SMS number, get the OTP, and then do a transaction. Other one is giving it for a 5-minute validity. Someone is giving for 2-hour validity. So there is no standardization of OTP delivery. Why it can't be proactive? Most of the banks have not enabled debit card to be used on IVR. So payments, it's another issue altogether. And then, of course, delivery issues that are there. So these are the friction issues that are there. So right now, Tier 1, Tier 2 cities are very well covered, but still Tier 3, where the real demand is coming in, the supply chain, we have seen merchants not being able to deliver for 14 days altogether to reach to that mile. So these are the various insights.
Some interesting provocations, I'd say, in that statement there. Deepak, what have your learnings from KPay been? And I'm interested particularly in understanding 2 things. And you made the observation earlier about consumer adoption through an obvious incentive versus what's the natural flow of digitized currency, A, on the source side, and B, to have a acceptance use case, which makes it a sort of daily habit. How did you guys think about that, and what have your learnings been? If you had to do it all over again, what would you do differently, and what are you planning to do now?
So I don't think in digital you ever have a perfect solution, right? you have to always keep learning and be agile enough to learn and change, because both the technology and the customer's fickle-mindedness is always there. Right? So it's not that what was good yesterday remains good for tomorrow. And I think that's what we learned. So I think whatever products we have created at Kotak, we think it's not, in digital, it's not products, but what we believe, you need to create platforms on which multiple products and customer experience can be built. So be it our Jiffy or Jiffy Saver, which was the first of its kind digital and socially connected bank account that we launched, not just in India, but it was the first of its kind anywhere in the world. We started imagining, thinking if there is a customer who wants to bank, but wants to look at a banking or a payment in a much simpler manner, as Sohini also said. That customer is looking at simplification, because a lot of times they're quite scared of banking as something where you initially had those grills or those gates and then security, and then so while it's good that you associate banking with trust, that your money is secure, but I think increasingly the security is not about the physical security, but how do you create experience while still making it secure. So both our experience, both with KPay, which was the first of its kind bank-agnostic payment platform that we launched, which connects today almost 30 different banks in India can use this, so it's not restricted to Kotak customers. And our learning was that I think if we can do away with the bank account details and make it simpler, you don't even need to know both at the source and at the beneficiary level whom do you bank with, and make it simpler. So the learning has always been, we started with Facebook. We realized only 125 million people on Facebook. So obviously you are not reaching out to large numbers. So last week we simplified KPay further. Now you can use Google+. If you are not on any of these, you can just use email ID, you can use your phone number. So we have created now a platform which is truly universal, as long as there is some way for us to identify you and connect your bank detail with any of the credentials. So we have moved beyond social, because we believe that social is a good thing to do, but social is not the only thing to do. When you have to simplify payment and make it easy for customers to understand, I think we need to build something around it. Building on social also, we realized that everyone says, I'll reward you for transactions. We said, how do we build something which rewards you for your social behavior? Because as I said, there's a lot of learning. We still don't know what is the end solution, whether consumers in India are going to actually use social in the way they have used other channels. But it's a journey. We have to walk through the path. We have to understand, because in customers' mind, still there are two big challenges that exist. One is about the privacy, and second is about the security. And I think these, and if you create a great product, you can answer it easily, because even in the most advanced countries today, you find not more than 50% of the people are using mobile apps. And if you go and ask why, we think it's not secure. So I think things which are moving, you may not mind using an app to book a cab or to shop, but I think when it comes on to money, a lot of people expect more secure the better. So when we launched a product like Message Money, and we had built in 3-factor of authentication, and I said 2 is given, why are we making it so complex? So I said, let's go back to customers and check. I mean, should we simplify or should we retain? And I think we were surprised that 7 out of 10 customers said, no, we find this more secure. So this battle always remains between what is right for the customer, between the security. But I think social helps you get these feedback and helps you correct some of these things. And I think we are glad that a lot of banks are building and stuff in the social, because I think it's something which will work with a collaborative ecosystem. It's not for one bank or few banks to build it. I think if customers start trusting that, yes, it makes sense, we can see much higher acceptance on all these products.
Before I come to you, Vasu, on the ecosystem side, I have a couple of questions for you. I just want to give Sohini and Deepak a chance to sort of respond to some of the provocations which Vishwas raises legitimately. So I think the two main themes which I saw, which he sort of spoke about in an ecosystem sense, one was about, can we have a sort of standardized customer experience for, to your point, which has the right balance between security and UX. Because each bank or each financial institution has its sort of different interpretation or different take on what that first factor or second factor ought to be, which creates a lot of customer dissonance and consequently adoption challenges. So quick 30 seconds on any bright ideas how we can solve that?
Yeah, no, I don't think I can think of a really bright idea on the spur of the moment, but I'd just like to address that with saying, yeah, I know IVR is one of those challenges, Vishwas, where I think banks haven't been able to come up with a uniform thing, but it's the classical chicken and egg story. So if you look at any other two-factor authentication modes where it is required, whether it is offline or online, it's pretty standardized. It doesn't matter whether you had a Bank of India card or a Citibank card. I'm just taking two examples of saying, and everything in between. It would pretty much be similar. But when it comes to the IVR and the Moto, these kind of transactions, it's just that even on the acceptance side, there is no, so, go back to the source and the usage. If there are no universal standards, then it's not going to, it can't come up in pockets. I can't have the best IVR solution and say that, okay, it works only for Access customers, and by the way, the rest of you guys, like, either open an account with me or, goodbye. So, it's a little bit on both sides, even from the merchant side. Why would you, so let me give you, so I used IVR actually only last week to book an air ticket, and there's a 300 rupees convenience fee just because you do it on the phone. It's ridiculous. So it's similarly, the problem is not just about banks, but a merchant who's going to think it's okay to charge something like, 5 to 10% of the cost of the ticket itself as just a convenience fee because you do it over the phone.
So Deepak, the other
many,
point, sorry,
many things for us.
the other point raised was, so that's a great challenge back. But the other point Vishwas raised was on the whole notion of, for instance, while RBI has allowed, I think you said debit cards, and not all banks have enabled it for usage on the digital side, and reflecting on what both of you guys said in terms of, the sourcing and the store of value, and that itself is a store of value from the bank accounts. But I think his observation was that banks have not uniformly implemented, enablement for digitization and usage of debit cards, and turning on, turning off merchant sites, categories, and, are you thinking about that? Is that something in the works?
The question here is, banks have a much larger risk to protect vis-a-vis the upside. The merchants have a much larger upside and no risk. So I would strongly say that unless the risk is equally shared, banks are not here to create inconvenience for customers. I think banks are here to give customer a great experience, but at the same time retain their trust. Why don't you go and put money in a wallet today? Would you put 5,000 rupee in a wallet? I doubt. You won't. Why? They are giving you a great experience. You can do a one-click, seamless checkout, great deals every day. Still, you don't go and put 5,000 rupee in a wallet. So I think banks are here, and banks are here because customers have a trust in the bank, and banks need to do things first to retain their trust, continue with the trust, manage the risk better, and of course provide convenience, but not in the order of convenience at the expense of risk and by losing trust. So I think we are very clear, and it's not about RBI or banks. Yeah, I understand. I think different banks are following different interpretation of a regulation, which is, I don't deny, I think, with that. But a lot of it also depends on what is the risk appetite of each bank. Today, if I go to RBI and say, I'm willing to take risk for all sub 2,000 rupee transaction, RBI is not going to say no to me. RBI is saying that we are okay provided somebody takes the risk. If as a consumer I go and dispute a payment, who's going to pay? Are merchants going to pay? None of the merchants are going to pay. Today, if Amazon has created a seamless checkout in US, they take all the risk. If there is a fraud that happens on Amazon site, it's not that the bank is paying for it. And that's why today a lot of e-commerce merchants who may be competing with Amazon, they use Amazon checkout on their sites. Over 80 merchants in US today, they use Amazon checkout on their e-commerce sites. Why? Because somebody is willing to underwrite that risk, which banks are unwilling to. So if Flipkart or any...
to interject, my only one is that if you allow a debit card usage on an online website with an OTP coming in, why not on the IVR? The same thing, an OTP will still be coming, which is secure.
As I said, creating a great customer experience, banks have been slow, and I agree. Otherwise, you wouldn't see the likes of Paytms in this market. I think we have learned, and a lot of banks are doing a lot of interesting stuff. And I think banks are realizing that you have to create frictionless. Yeah, we may not have addressed a particular issue that you raised, but I think a lot of products from all the banks I'm saying, I'm not talking about Kotak in specific, I think they are increasingly aware of bringing customer convenience. But again, as I said, not at the expense of security in this.
Just switching tracks quickly, and Vasu, just two questions for you. One is in terms of the whole interoperability of acceptance, which you alluded to, if you could care to expand on that. And secondly, I want to pick up on a very interesting theme, which is particularly relevant for many people in this room who have started and are participating in the whole startup ecosystem, to your point on the whole mobile and digital payment sort of space. And I was reading somewhere that the notion of David versus Goliath is now changed to say, can David dance with Goliath? And just thinking about two different extremities of the spectrum, what would be your sort of guidance to all the people here who are sort of, many of whom are starting up and sort of blossoming in this ecosystem?
I think the second question is easier to answer. So for people who are looking to start a digital payments business or a wallets business, it might be useful to look up research in the US where the most innovative companies have moved away from trying to create a wallet to creating invisible payments. So if you're trying to create the company of 2020, you want to figure out how invisible payments happen and not how you're creating a better wallet experience. If I just had to bet on it, the companies that will succeed are people who figure out how do you authenticate a customer transaction with a zero click, not even a one click or anything. How do you know who the customer is transacting and find a trusted way to charge the account? That's the 2020. And so if anybody's working, that's the direction they need to be working on. To the earlier question on interoperability and to some of the earlier points that the panel made, a couple of examples from our experiences on BillDesk and even outside of BillDesk, even if you take India as a market. IRCTC as a website has been there for over a decade now. And at various points, it used to be a great fashion to do IRCTC bashing in every panel to say the website sucks, you can't log in, you can't do this. Yet they got onto hundreds of millions of transactions. My simple point, if there's a genuine consumer need, and sorry Vishwas, irrespective of how an OTP will function or how a bank deals, if there's a genuine consumer need and something is solving it, people take to it. Within the payments world, taking out, from going out from IRCTC, I could do another example of LIC, which perhaps is one of the largest players from an electronic payments perspective. You will not hear consumers complain of user experience there, either of the way a policy is bought or sold or how a payment happens, how it renders itself on a mobile device or not. Those to me are just noise and distractions when the core is not working. Core works, everything else will find a way to solve itself. In the current context, I would go back to the theme that I alluded to first, that two big problems. India does not have enough acceptance. And it's a problem that banks have faced over the last 15, 20 years. And if it's not solved, it's not going to magically change itself in the smartphone-based digital world. Yes, smartphone-based digital world can place great pressure on the ecosystem to solve the problem faster, because now you have a whole sort of new voices clamoring for better solutions, and therefore that will bring about, let's say, more pressure on the ecosystem. But what needs to be solved for is, where can consumers go make payments? Again, quickly making alluding to other markets. And Apple Pay can work because there are already hundreds and thousands of merchants who accept electronic payment, and now you have a superior way to pay, if that were to be a superior way. Any innovation there, if you have a core infrastructure that exists of accepting payments, will work. Within that, to some of the points the panel made earlier, people are working in silos to say, I'll create it and I will own it and I will not open it up. That's not going to take far. In fact, it's going to work negatively for the system, where then you have the regulator or quasi-regulator stepping in to create unified platforms and interoperable systems, which is, not necessarily a great commercial proposition of the market as a whole. So, let's say the commercial players need to figure out a right interoperable model before you want anybody else to step into that space.
Thanks for that. Right, I'm afraid we've run out of time. I want to thank all the panelists once again for your sort of views and thought-provoking insights and sometimes provocations. So the journey to enabling India in digital is, in summary, it's a network, regulation, interoperability, and scalability issue, which I know is going to be covered in some of the later sessions. So once again, thank you all very much.